proper, what we're going to do is that do some polls as usual. We have done this many times. A quick poll to better understand our group tonight. Perhaps you can use your handphone, do the QR code scan, or go to menti.com and key in that passcode 64335646. Are you ready to go live? I'm going to switch my timer and see what is your response. Hang on. Okay, it's going live. What challenges do you face when trying to plan for your retirement? This is a wow, a big matter. This is the first time I see this very interesting medical. Who else? I just want to see the others responses. This is one. Who else? Well, quite a number of us here is coming up. Wow, with procrastination. This is very common. That I've seen it many times. Lack of knowledge. Another one, health. Which is the one that stands out? Looks like it's all balanced. It's 5 or 6. It's still balanced. There is no big words popping into my face at the moment. Die early. Somebody must be joking. Yeah. Who else? I think we have more than that, right? Yeah. It's coming in. Good. Wife too fierce. I think hopefully you are not with your wife at the moment. I like the joke. I like the joke. Unsure how to start. Yeah. I think it is quite true. Some of these remarks here, the challenges are quite common. And we would like to address this as we go along tonight, especially some of these big stands out procrastination and lack of knowledge is quite common. Let me stop the poll at the moment and go for the next one. Let's see how it goes. On the scale, not prepared to well prepared. On this question, I am well prepared financially for retirement. 2.5 is almost there. I would love to be surprised tonight. I would love to be surprised tonight. See whether I will be surprised tonight or not. Is there any difference from the previous webinar? It's 2.3. Come on, go up. Looks like you can go further up. Oh my goodness, it's always the same, hovering around 2.5, around 2.5, 2.3. Tonight is spot at 2.3, so a little bit low. But anyway, we will address this as well. Hopefully, after this webinar, you have more knowledge and better prepared financially. Okay, let's stop the poll. Thank you very much for your participation. Let's begin. Let's begin. Let's share screen again. Okay, let's go on to the slideshow. Okay, we titled our webinar as Retirement with Retire with Abundance. Well, what we see is that if you look at the screen, here is basically there's a lot of posts and articles written around retirement. For the last half year or so, many articles, especially during the weekend. If you are basically following the Sunday Times, there's lots of articles with regards to this topic. And one of them is here. It says more Singaporeans now feel they don't have enough money. Is it true? Is this really the poll that says that is we don't have enough money, there's a lot of fear. Is in fact 60% of Singaporeans feel that way. On the readiness to retirement, it's kind of worsened due to this COVID pandemic. The another articles in the Straits Times, it talk about people are really clueless on the cost of retirement, and some really underestimate the retirement needs. And I just circle some of those highlights here on that as well. Yeah, and this one is another one. Very surprisingly, there's echo. There's surprisingly 1 in 2, which is 50% of the high income earners have money problems. That is quite surprised. And this is a poll done recently. And many top earners leave their cash idle. Is it good? Is it really good to leave your cash idle? I mean, the money problems I can summarize on these 2 articles is that the reason is that one cannot control the spending. When you cannot control your spending, you have this money problem. The other one is that not basically lack of financial planning, which is what the poll was just now. And worst of it is that some of us have that mentality that cash is king. That cash is king. That create the problem as well. And worst of it is that we are not staying invested. That may cause a problem in terms of the lack of saving mentality that we talked about earlier on. Okay, so let me go on to talk with regards to the proper the webinar itself. We call ourselves the 3 pillars of retirement. That is the strategy on retirement that we're going to share with you tonight. All start with the letter I, and the first one is investment. So what we're going to do is that we want to help you to bring your knowledge to a level that you'll be at the top 40% of the group of Singaporeans that will achieve the dreams of retiring with abundance. Are you all ready for the webinar on the first pillar? If you are ready, just type in the chat and say yes. And let me see the response. Yes, Joel says yes. Yuan Tai, yes, good response, man. You guys are all ready. Let's begin with this straight away. Okay, let me introduce my good friend, Yuan Tai. Yuan Tai, if you look at it, it's just featured in the Sunday's Time a couple of years ago on investment. He was being interviewed in the Straits Time on how he do investment, and we will have a good chance to listen to Yuan Tai and let him share his experience on investment to you. Hey, over to you, Yuan Tai. Let me stop share.
Thank you, Alvin. Thank you, Alvin, for the kind introduction, and it really frames our talk today. So let's go for an adventure.
Okay,
so
I'm
the other
ready.
day, I was cycling from my home. So I stay in Hougang, so I was cycling to Chinatown. Nowadays, we cannot travel anywhere, so we are stuck in Singapore. So we either cycle or we hike. So I was cycling from my place in Hougang to Chinatown. Oi! What? Why are you carrying your bicycle? I am carrying my bicycle because I don't know how to ride my bicycle. If you don't know how to ride your bicycle, then learn how to ride a bicycle. So, ladies and gentlemen, if you are here today to learn how to ride the bicycle, and by our bicycle, it means that the hard-earned income that we earn day and night, we slog at our work and we earn the income. But many of us, instead of using our hard-earned income wisely, like Alvin has just mentioned, he showed the article, a lot of us just leave it lying in the bank. That's equivalent to us not learning how to ride our bicycle. So today, if you are here together with me to learn how to ride the bicycle to a happy retirement, make use of our income wisely to help us retire with abundance, type in the chat box right now, yes. Yes, Alvin, Joel, yes, let's learn how to ride the bicycle. LH, Queenie, Aaron, yes, Vanessa, retire with abundance. All right, let me just start sharing my slides. So we are here all together to learn. In the next 1.5 hours, me and my team will show you how we can ride towards abundant retirement. This is Mr. Tan, and Mr. Tan is an average Singaporean family. So most of us, the median income for graduates is about 4,500. That means the 50th percentile will earn about 4,500 if you have a degree. So the family will combine income. Nowadays, the family, both the husband and the wife will work. So monthly net income about $8,000. Monthly average expenses, so you can see in this picture that Mr. Tan has 3 children. Just out of curiosity, how many of us here have children? Just type inside the chat box. Quite curious to know how many of us have children over here. Alvin, yes. Alvin, who else has children? Eugene, 3. Anybody else has children? Anybody? Pansy, 1. Okay, so I hope children is not your retirement plan. How many of us make children our retirement plan? I hope you don't do that. Yeah, because nowadays, you know, the cost of living is going up, and children themselves, even for their income coming out, graduate, earn about 3,000 plus, it is difficult to earn a living and even to afford the BTO. The prices keep going up year after year. So those of us who have children, average expenses $6,000. And for this family, Mr. Tan, his disposable cash flow is about average of about $2,000 per month. So I'll recommend that we keep aside certain liquidity, emergency funds. As the last 18 months have shown us that pandemic, many of us lose our jobs, the business are affected. So it's always good to keep at least minimum 6 months of your liquid income, 6 to 12 months. I'll personally recommend keep 12 months to tide you over in case you lose your job or there's a pandemic. And out of the $2,000 cash flow that Mr. Tan has, we recommend that you set aside about 20%, so $400 per month to invest. So the question now is, what can Mr. Tan invest in? Let's find out. There are 3 broad categories of investment over here, and this in this next 1.5 hours is not going to be a deep dive, but I'll give you as much information as I can about investing, and hopefully you take away something from this. So the first category of investors are what we call the growth investors, and generally growth investors, they have a shorter term of investment, shorter horizon, and they usually are willing to take more risk. So growth investors usually look at sectors with high growth potential. For example, some of you may be familiar: Tesla, SEA, Cloudflare, Tencent, and iFast. These are some of the categories of growth stocks. We call them growth stocks, and they are usually priced at a premium. So they have a very high PE ratio. PE stands for price to equity ratio. And the reason that people pay a premium is because they believe that within the next 2 to 3 years, very short, next couple of years, these stocks will have double-digit growth, and usually they are exponential growth. But that said, that usually these sectors, they are taking on a higher amount of risk as well. So this is called the growth investors. And the second category is called the value investors. So value investors, I'm sure some of you may have seen this word thrown about quite a bit on the YouTube or on the Facebook advertisement. Value investing, value investing, value investing. What is value investing? In very layman's term, value investors generally go for undervalued stocks, which means stocks which are selling at a discount. And there are 5 key areas that value investors generally look at. They are called the PE, price to earning ratio, the PB, price to books ratio, free cash flow, which is the amount of cash that they have minus the debt, intrinsic value, which is the value of the total assets minus all the liabilities, debt to equity ratio. So generally, these companies have very low debt to equity ratio and their books are pretty healthy. And the last area that value investors look at is called the fundamentals, which means that these people believe that the companies, like for example, Singtel, Sembcorp, Thai Beverage, and Grand Venture, these companies, they have very good fundamentals. They have a very high unfair advantage or very good economic moats, and they are generally priced at a discount to their intrinsic value. So this is value investing, and generally value investors hold their stocks, buy and hold their stocks. They don't look at going in and out of the stock market like growth investors. Finally, the last group of investors are called the passive investors, which is most retail investors, and those investors who are just started on investing, they might want to look at a passive investing strategy, which means that they look at how much dividends that these stocks can give you, and they do something called a dividend play. So generally, passive investors invest in blue chip stocks. They too generally have a longer holding period. They look at cash flow, they look at debt to equity, look at earnings. So some examples, you may have been familiar with them: Singtel, Hong Kong, and the UOL shares. Singtel, I have an experience, a history with it. Singtel is my very first stock that I bought in 2007. Unfortunately, when I let go in 2008, I made a significant loss, and that was when I was back in my university days, and I lost $2,000 to my Singtel stock. Yep, so generally, passive investors, they hold and they look for the dividend gains from their stocks. These are the 3 categories of investment. So after mentioning so much figures, why, your question will be, why are these numbers important? So like Mr. Morpheus in the Matrix, in the next 5 to 10 minutes, I'll give you 2 examples and we look at why numbers are important. Example number one, please participate with me. So my question is, knowing these facts, would you buy this stock? Would you buy this stock? The CEO sold the house and the car to start this company. So the CEO literally went all in. And one of the things that we look at when we do stock investing, we look at the management team. And this CEO of this particular company is very invested in this business. So selling the house and selling the car to start the company. Share price tripled from 70 cents to $2.10 in the first couple of years. It's amazing growth. It's a good growth trajectory, almost unreal. CEO won Entrepreneur of the Year award from Ernst and Young. That's award-winning CEO companies in industry with good growth potential and demand, and he has an unfair advantage in terms of technology. Temasek Holdings is a shareholder. Okay, so ladies and gentlemen, participate with me right now. Who would buy this stock, or who would keep a lookout for this stock? Please type yes, you buy it. No, if you are not interested in it. Please participate with me. Let's have some responses. Queenie, yes, you buy this stock. Who else will buy this stock or look or keep a watch on this particular stock? No, Eugene. Who else? Who else? Keep a watch, Joel. Okay, you watch, look out for it. Who else? Let's participate together. Okay, Aaron, generally Temasek Holdings has a pretty good track record, but of course even Temasek Holdings make big mistakes, but on the whole, on the past many years, 10 over years, Temasek Holdings generally has won more than it lost. That's why Akong, our Singapore government, is able to give out generous budget during our COVID-19. That's because Temasek is, over the years, he has a net gain. Yeah, so to follow Temasek Holding is generally a okay or wise strategy. Not sure. Okay, Pansy, let me just review more numbers. You see more numbers. Okay, let's dive. Let's do a deep dive into the financial statements. Okay, looking from left to right, chronological order, 2013, 14 to 17. Okay, this add 3 more zeros behind for those of you not familiar with financial statements. The revenue increase generally in the first few years, but there's a red flag. It's a huge drop in revenue from 16 to 17. Earnings per share bracket stands for negative. In the more recent years, it actually dropped 21 cents per share loss. And dividend per share, somehow it still managed to pay out dividend. Okay, just a side over here for those of you who invest in stock market and do the dividend play. Paying out dividends doesn't always mean that this stock is a good buy, because paying out dividends means that the company is taking out money which can be invested back into the business and paying out to the shareholders. Yeah. So paying out high dividend doesn't mean that the company is a good buy. For this company, in spite of its loss and dropping revenue, it still pay out dividend per share. So this is actually also a red flag. Okay, some of you might already know, but let me just review one more detail. Okay, this company actually issued 6% perpetual bond. 6% perpetual bond in 2016, which means that for every $1,000 you invest in this company, so it borrows money. The bond means that the company, when a company issues a bond, it borrows money from you to invest into its own business. And the condition for this perpetual bond is I borrow 1,000, the company borrow 1,000, it gives you $60 back every year. Okay, who will take up this 6% perpetual bond? Type yes if you take it up, and no if you will not take it up. Please type in the chat box. No, Joel, no. Okay, who will take up this 6% perpetual bond? Okay, this company borrowing money. So now we are the loan shark. The company borrowing money and you give back 6% every year. No, Queenie. Okay, nobody will take it up. Okay, let me just review. Some of you may already guessed it. A recent news article, it just came out last month. HyFlux is this company. And let me just blow it up for you, the parts of interest. Beleaguered water treatment HyFlux. So the High Court actually approved this company, HyFlux, to wind up. And 34,000 retail investors invested a total of 900 million. So when 2016, HyFlux issued the perpetual bonds, and 2011 it issued preferential shares. Retail investors actually took up their offer because Temasek Holding is in it. So they think most people think that, oh, okay, I just take up. Anyway, 6% sounds like a good deal. But just last month, High Court approved, it's winding down. So it from its peak of 1 something billion valuation, it actually becomes zero. So it's zero. And out of these 900 million that retail investors invested, a lot of it actually is from their retirement fund. So for you and I, we invest 900 million and we lost zero, gone. It's all gone. Okay, this is one example. Let me move on to the second example. Let's play another game with this stock. Would you buy this stock? Let me give you the facts. Distributable income 22% year on year, 51.6 million. This company is in a different business model. It's something called the Real Estate Investment Trust. So real estate investment, simply put, it buys properties, commercial properties, industrial properties in Singapore and all over the world. Then it leases them out to companies and it earns income from the rental. So this is called a real estate investment trust. This particular company is REIT, R-E-I-T. Stable occupancy 96.7% last year, COVID, which is pretty impressive, I must say, because COVID still 96.7%. And last year's figures as well, weighted lease expiry, average lease expiry 6.2 years. So for the, in layman's term, for the next 6 years, it has secured a stable income, recurrent income, very stable. Okay, and distribution per unit increase actually first quarter this year 5% versus the same period last year, 2.8 cents to 2.94 cents actually increase the distribution, and the distribution yield of first quarter this year 5% versus 5.1%, which is pretty impressive given that it's the COVID time and some of the companies actually gave up or terminated their lease, some of the commercial companies, because everybody work from home right now and this is the norm. So who will buy this stock? Please type in the chat box right now. Would you buy this stock? This one quite steady from PP1, quite steady from PP1. Who will buy this stock? Yes, if you buy the stock or you keep a lookout for it. No, if you will not consider this stock. Please type inside the chat box right now. Yes, yeah, can afford. Okay, Joel. Okay. Who else? Who else? Aaron, yes. Queenie, yes. Okay, Alvin, more info. Okay, very good. Let's have more info. Let's look at the figures right now. Okay, this goes from right to left in chronological order. So the revenue is pretty stable, 164, 165. And the latest 170, pretty stable revenue, million in terms of million at 3 more zeros. Operating income, the most recent one last year actually went up slightly, the operating income. And let's see the earnings, normalized EBITDA means the asset. Simply put, in layman's terms, is the asset. So it's pretty stable as well. Pretty stable EBITDA, this one. Okay. So let me just review. Keppel REIT. So this company is called Keppel REIT, and it's most people look at it because it has very healthy figures, very stable income. In spite of COVID, you want to see some resilience in the company, and this company has shown it in terms of the resilience to pandemic. So that's one thing that we look at when we look at companies to buy the stocks. Is this business resilient to pandemic? So KREIT, we can actually look at it. It's doing pretty well. Okay, so my question to you, after looking at all the facts and figures, what would you prefer to spend most of your time on? How would you like to spend your time? Option A, spend with family. Option B, fun and exercise. Or option C, monitoring ratios and reading charts like Mr. Morpheus over here. Please type inside the chat box How would you like to spend your time? You want to spend with your family? You want to spend exercising, hiking, and cycling together with the happy man? Or you want to spend with Mr. Morpheus, looking at numbers and studying the charts and figures and financial statement? Please start. Queenie, okay, 3. Okay, Marvin, family. Joel, A and B, family and exercise. Aaron, C, no C. Don't want to spend with A and B. Vanessa, okay. I'm actually very sad. Why nobody want to join me and look at the figures? Okay, so Mr. Morpheus, just get rid of him. We'll all choose the blue pill. We don't want the red pill. Okay, so would you like to save time and reduce your risk significantly when investing in the stock market? Let me give you 3 Ds. Don't worry, it's not the D24, not the Mao Shan not durian, but let me give you 3 Ds. If you like, please guess what are the 3 Ds, what I call the golden rules of investing. Please make a guess. Start with the letter D. Please type inside the chat box. What are the golden rules of investing? Diversification. Joel, yes, very good. What else? Make a guess. Start with letter D. Start with letter D. Data, Aaron, yes, we need lots of data. It's a good guess, but it's not the answer I'm looking for. We do need lots of data. And right now, I already have a S&P 500. S&P 500, if you guys are not familiar, the US market S&P 500 is the 500 biggest companies in the US stock market, and they are across different industries, different countries. So maybe some of you are familiar with names like Google in the technology space, Google, Facebook, in the e-commerce logistics space like Amazon, in the retailing space like Nike, in the real estate come fast food like McDonald's, some of these companies. S&P 500 basically tracks the 500 largest company. And there are 3 Ds that can be seen from this particular example of S&P 500. You can see that it always goes up on an upward trend. So first, the 3 ways to reduce risk. Diversification. Joel has said it, diversify across different sectors and countries. And you buy into S&P 500 index fund, you diversify and you spread your risk over many baskets instead of putting all your eggs into one basket. And if the basket fall, like for example, high flux and fall to the floor, you lose everything. So one of the strategy you can use, invest in the index fund, and it tracks the 500 biggest companies. Singapore, you can also follow the STI, that's the STI index, and Hong Kong index, Hang Seng, Shanghai as well. So diversify, just buy the index and it tracks over many companies and different business models and different sectors. Second D, duration over 10 years or more. So there's this 8th wonder of the world called the power of compounding. The power of compounding. And if you give yourself a longer period of time, if you have skin in the game, let me just repeat, the key is skin in the game. If you just leave your money lying in the bank and don't do anything about it, that's not called skin in the game. That's called money in the bank. And money in the bank don't do anything for you. But you stay invested inside the stock market over a longer duration, you can see there's an upward trend and it gives you the power of compounding. And the magical thing about it is the longer you stay, the more the increase. It is an exponential curve. So the key thing is you got to stay invested for a longer period of time. Finally, the last D, dollar cost averaging. In layman's term, you set aside, remember our example of Mr. Tan, he set aside every month 20% of his cash flow and he put aside and invest it. So most of us, we try to time the market when we are beginner investor. I myself, I tried to time the market, but the fact is that many people cannot time the market correctly. Even experts also can't time the market effectively because of something called the emotions come to play when we invest. So most of us, ideally, we want to go in when the price is low and sell when the price is high. But in reality, we will do the opposite because of our emotions. However, if you employ this strategy called dollar cost averaging, every month you set aside a certain amount and you just invest it. Over a long period of time, you can see in this chart, S&P 500, it is an upward going trend. Of course, in between there will be some dips, financial crisis, subprime crisis, the Asian financial crisis, so on and so forth. But if you stay in it long enough, it's always an upward trend. And dollar cost averaging, you apply this 3D diversification, duration, and dollar cost averaging, you will minimize your risk and then increase your chances of making returns. Okay, so something called the actively managed portfolio that actually applies all these 3D is, you can see it stays invested in an actively managed portfolio. You diversify across many sectors, across different companies, across different countries even. And this example of different portfolio, it's portfolio A, B, C, D, and E. Different portfolio, I won't go into the details, but they are made up of different companies from different industries. And they generally give you an average. You want to see a long-term average returns, a 5-year annualized return of between 9 to 10%, which is pretty impressive. And this actively managed portfolio, the beauty about it is you just have to set aside your funds to invest it, and it goes in. So there is minimal work and effort required on your part, so you can spend most of your time with your family and exercising instead of looking at numbers and charts. So to sum it up, what should Mr. Tan invest in? There are 4 general categories. I myself invest in all these categories as well. So the first one, value investing, buying stocks. Of course, you can make a gains of 100%. You can 2 times your stocks, but you can also lose everything. Generally, value investors look for a medium to long-term period, so anything between 5 years or even longer. And of course, you got to do your research. If you want to do value investing, it's quite a bit of a learning curve for you. You need to understand what are the companies to look out for, how to calculate the intrinsic values and all the other values to determine if this company is a good buy or not. So I do value investing. It's one of my portfolio. The second category is called the yield stocks, ETF and REITs. So we have explored Keppel REIT, that's one example. And generally, ETF stands for exchange traded funds. And this gives you a basket of funds as invested in it, but you have to do some homework to understand what do this ETF invest in. So some of you have heard robo-advisor. Most of the robo-advisors actually invest in this ETF, the exchange traded fund. And it's not true that you're going to do all your homework, because you have to understand what do these robo-advisors invest in, what are the makeup of these funds. And you got to determine if that is the right mix for your own risk profile. So there's some homework needed. So this is yield stocks, robo-advisory. The third category is property, something called property. I myself invest in this as well. And take note, it's not passive income, but it's active income, because there's quite a bit of homework you need to do to research on what is the right property to buy. And then after buying the property, you have to find your tenants, you have to renovate if it's a second-hand or third-hand property, you have to maintain the property, so on and so forth. And the downside of property investing is it's not as liquid as the other category. So you have to hold for it for long term. Right now in Singapore, you can get a yield of 3%. It is not bad already. 30 years ago, when my parents invested in property, they can easily double or triple their value. But nowadays, the reality 3% 为太料. Finally, actively managed portfolio, which I just mentioned, gives you a ROI between 5 to 16%, depends on the makeup of funds that you choose. Generally, it's lower maintenance as compared to the other categories. So this is also in my personal investing portfolio. Right now, I've finished my segment, and if you have further questions on investing, feel free to reach out to me personally. I would like to introduce to you guys someone who has been a great blessing to me over the past 2.5 years. It's my honor to introduce the Abundance Life Coach, Eugene Xia, and he is in a mission to spread abundance to all of us. Put your hands together and welcome Eugene.
It's called put your hands together. Okay. Thank you. Yeah, I tell you, Yanda always blows my mind. Yeah, he was never in the stock exchange, but he knows so much about investment. I actually started my career in the stock exchange. Yeah, I think a lot of people don't know. I started my life in the stock exchange of Singapore, and I hated my first year there because I didn't even have a degree in finance. And then there I was working in the stock exchange. Yeah, so life was very stressful. Every day I have to read money pages, Financial Times, Business Times, Bloomberg. Very, very stressful. After a few years there, osmosis happened. You know, osmosis? Yeah. Because every day you are in financial capital markets, you know, every day you hear things like Dow Jones, S&P, REIT, structured warrants, until, wow, all these terms start to go into my pores, you know. Yeah, you know, some people like to put mud or milk. Yeah, I put all these numbers and financial products. Yeah, so 7 years later, the Singapore Stock Exchange CEO invited me to follow him to London, New York, Hong Kong, Tokyo, to carry his bags. Yeah. I think some of you thought I'm supposed to give a speech on stage. No, to carry his bags. Yeah, and to sit down with him to take minutes. Yeah, so that year was a breakthrough year for me. I will always remember it. Late 2007 to 2008. Because after I followed him around, I became a financial expert. You know, I can actually spin stories from numbers. You know, the numbers themselves quite boring, but I can spin stories. That means I can tell people whether this company doing well, not doing well, or why is it not doing well, how you have a U-turn, and so on and so forth. Okay, so there's a short background about me. And then 2013, something happened to me. Yeah, so I'm supposed to be some financial expert, work in Singapore Stock Exchange. And after that, got poached and headhunted by Japanese investment banks and moved to Hong Kong to be an expat there, running the region. And then nosedive. Yeah, my life took a very drastic turn for the worse. I was asked to leave my company. This was in Hong Kong. Yeah, can you imagine? I brought my whole family there, 3 kids, and then my wife, and then I have to leave my mother-in-law behind because cannot bring so many people. And then I tell you, so embarrassing. After 2.5 years, I was kicked out, not just from my company, but kicked out from Hong Kong. Yeah, then I had to come back to Singapore, and I was totally broke for 1 whole year, and I have to put my kids on food coupons. Yeah, so that's my self-introduction, and that's the reason why I'm taking the second segment. Okay, the second segment is not investment. It starts with the letter I also. Okay, anybody wants to guess? Guess. The second segment starts with the letter I. It is not investment, but it will still give you money. Hisham, good guess? No, not insurance. Anybody else wants to guess? Maybe there is Grab food voucher. Interest, intellect. Okay, the answer is inspiration. Not bad. Okay, because tonight is about retirement planning, so it is all money related. Yeah, Vanessa, you're right. I like to give inspiration, but not Not tonight. Yeah. So tonight I'm going to say something very technical, very technical, very numerical. It is called income. Cannot say income, must say income, because then the money will come. Yeah. Sorry, I'm not superstitious right now. Okay, so income has two components. One is called active income, which is what you're earning right now from, let's say, whatever company you're from. Okay, Sony or Continental or Mindef, whatever company you're from. Yeah, but the other component starts with the letter P. Okay, so there's active income and something else income. Start with the letter P. Sorry, a lot of guessing games tonight. Huh? Wow, Queenie. Well done. Yes, it's passive income. Okay, just now Yuan Tai said something about property, and he said property is not passive income. Okay, I know a lot of us attend property seminar and they tell you it's passive income, or you go to value investing workshop and they tell you that dividend investing is passive income. Let me just tell you from a person who has been through the Singapore Stock Exchange and been through two different investment banks, and both Singapore and Hong Kong, and I tell you that property is not passive income. Okay, there's a lot of things to manage for property. You have to make sure the agent is trustworthy. And then, by the way, when I was in Hong Kong, I rented out my Singapore property, because I'm not staying in Singapore. So what was the point of having an empty place? And then, wow, that is a total nightmare, right? The person have to argue with me and then destroy my place. I have to do renovation and I have to find tenants again. I tell you, the whole thing is a total nightmare. Okay, so it is not very passive. Yeah, but it's relatively passive compared to your salary. Salary, you have to work from 9 to 6 every day. So property investment is better. And then dividends is also not very passive, because you may be earning dividends very well for, let's say, 3-4 years. Then suddenly the company wants to be delisted. Right now, CapitaLand, I can't believe it, man. CapitaLand wants to be delisted. SPH, all these blue chip companies all want to be delisted. I never thought I would live till the day where blue chip companies are delisted. Like Olam. I tell you, I'm old enough to have seen all these so-called market darlings like High-Flux, China Aviation Oil, all like suddenly take a U-turn. Okay, so dividends are not passive. Neither are they guaranteed, because it depends on whether the company is making money. Okay, I'm going to share with you the only, okay, please write down the only form of passive income in the world. Truly passive. Even more passive than writing music for Marvel, Like, every time they play our music, they give you royalties. Like, even more passive than that. Even more passive than writing Harry Potter. Like J.K. Rowling, write Harry Potter, turn into movie. So she's earning a lot of licensing and royalties. All these are still not very passive, because, people's whims and fancies come and go. One moment, Harry Potter is in, another moment, Harry Potter is out. Okay, so hang on tight to your chair, and I'm going to share with you the true form of passive income. Yeah, but first I want to know some money. Please tell me, how much passive income do you want per month for retirement? Assuming you retire this year, okay? Assuming you retire, because people like Queenie, like very young, probably another 40-50 years before you retire. Okay, so assume you retire in 2021. How much passive income do you want per month? Go. Marvin only wants $4. Okay, very good. Hey, Marvin, you're retired already. Okay, Yuan Tai is 10K. Marvin is 4K. No shy. Don't be shy. Aaron is 10K also. Very good. LH is 4K. Joy is 2.5K. Remember this year, so don't count in inflation. Yeah, don't count in inflation. Alvin is 5K. Yeah, I believe some of you haven't replied. Queenie is 8 to 10K. Very good. Well, Queenie only 25 years old, 8 to 10K. Okay, Pansy is 8K. Very good. Vanessa is 5K. Okay, good. You see, different people have different desire. Okay, there's no right or wrong. 5K is not wrong or right. 10K is not wrong or right. Okay, it's just what you want. Okay, so what is wrong is you set a target, but you do nothing about it. Okay, that is wrong. Like I tell people I want to lose weight, but every day I still eat potato chip. That one is wrong. Okay. Hey, by the way, I lost 11 kg this year. Yeah, hey, applause. Yeah. Okay, so if you set a target, Hisham, thank you. Yeah, Hisham, I'm going to help you lose weight. Keep hiking with me every month. I promise you at least 10 kg by December. Sorry, I digress a little bit. So please, if you set a target of 5K, 8K, 10K, make sure you do something about it. Okay, don't just set numbers for the sake of setting numbers. Then you will start to be very jaded and disillusioned about your own goals. Okay, so who here is ready to learn how to have true passive income? Type the word passive right now. Passive, 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 passive. Queenie, passive. Yentai, passive. Hashim, passive. Hisham, not Hashim. Hisham, Joel, LH, Aaron, very good. Okay, time for passive income. Okay, please don't throw anything at me, because the first passive income is called CPF Live. I know you're throwing something already. Hey, don't like that. Stay in Singapore. This is our blessing, you know. Yeah, you think other country got CPF Live? You know, I was in Hong Kong. They have something called the MPF. Wow. Hey, whoever is in Hong Kong, please forgive me for saying this. It is very lousy. Very lousy. Okay, I was there for 2.5 years and they forced me to choose 2 different kind of MPF scheme. And both are involving unit trust. And both have no guaranteed interest. Something wrong, you know. No wonder Hong Kongers have to stay in, cages. Don't believe me, go and Google Hong Kong cages. Right? People have to stay in cages. And my uncle is an engineer, stay in some flat that looks like 2-room flat, Engineer, Yeah, okay, I'm not here to complain about Hong Kong. Okay. My point is, it's a blessing to have CPF Life. Hey, who agrees with me? There's a blessing. Put the word blessing right now. Blessing, blessing, blessing. Be grateful. Yes, thank you, Joel. Thank you. Okay. I'm not forcing you to vote for PAP. I'm just saying that CPF Life is a blessing. Hey, this is life. That means from 65 onwards until you live until 110 years old, 120 years old, 150 years old. It's just going to continue paying monthly, This is crazy, I tell you. Whoever came up with this scheme is a genius. Okay, this is the first kind of passive income. Okay, the second kind is called annuity, which by the way is also something like CPF, except that this one you have to buy on your own. Okay, you cannot buy through CPF, you cannot buy through the government, you have to buy on your own. That means find a financial consultant somewhere and go and buy from him or her. Okay, so these are the 2 kinds of passive income. Let's go one by one. Who here can tell me that for the richest person in Singapore, okay, I believe his name is Forrest Lee. Yeah, I just read the news today. Singapore's richest man is called Forrest Lee. Okay, so if you're the richest man, tell me how much per month do you get from CPF Life? Go to the Zoom chat and type. How much per month do you get from CPF Life if you are super mega rich? Yuan Tai says 2K, don't know whether correct or not. Riches there. Don't be tricked by Yuan Tai. Come, go to Zoom chat and type. Per month, how much are you going to get from CPF Life if you are the richest man in Singapore? Hey, how come no one guessing? I give you 5 more seconds. 4, 3. Hisham thinks that you can get $1 million per month from CPF Life. Okay. Someone? Anyone else wants to guess? 5, 4, 3, 2, 1. Okay. I'm assuming you all don't know the answer. Let me tell you the answer. The answer is $2,230. Really? You think our government stupid, is it? Very rich people put into CPF and grow at 4%, and then the rich become richer. Then I tell you, PAP will never get re-elected. So they are very clever. Okay, no matter how rich you are, the maximum you can put into your retirement savings in CPF is $279,000, which for the richest man is small change, okay? Peanuts. That's why people who tend to earn a lot over the years, I mean, maybe not right now, but as you get your increment, promotion, right? As you earn more and more, then you will soon find that your CPF Life is not very helpful for you. Okay, but if your income is low, of course, then you can only count on CPF Life and nothing else. Okay, so right now, I'm going to assume that all of you here has enough to pay for CPF plus a little bit more. Okay, so a little bit more is called annuity. Okay, disclaimer, in case MAS is here or anybody is here to arrest me. Okay, I'm not here to sell any product. I'm here to tell you how I, Mr. Eugene Seah, plan for my retirement. So other than CPF Life, Mr. Eugene Xia, got an annuity. And every month I put in $1,212. Okay, very nice number, right? 1212, 40. If you strike, remember to treat me to lunch, okay? 1212. Hey, by the way, if you think that 1212 is too much, you can put in $300, $400. It's up to you. Yeah, but some of you think 1212 is too little, then you can put 4,000, 5,000. Okay, very flexible. Unlike CPF Life, okay? This one is totally up to you, and no one will stop you from putting less or putting more. Okay, it's totally up to you. And then how much will I get in return? Dun, 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 dun. Dun, dun, dun. Hey, not bad, eh? My 1212 suddenly magically grow into guaranteed. Guaranteed, please write the word guaranteed. 1480. Hey, this is better than POSB, don't you think? This is better than putting money in a biscuit tin under my bed, don't you think? Guarantee plus double chop, chop, chop. Okay, like a passport like that. Chop, chop. Must chop once in Singapore and then chop one more time in Johor. Very important. Hey, can you imagine, my hard-earned savings is 218,000 over 15 years. Okay, not immediately, over 15 years. And then altogether, I will get 400,000+, you know. Hey, this is called no-brainer. And all I need to do is just sign a plan a few years ago, and I will definitely be guaranteed having this when I retire. In other words, I will have passive interest gains of 260,000. Okay, I only know of Bitcoin that can outperform this. Unfortunately, Bitcoin is not guaranteed. Yeah, I also know that if you buy Amazon stocks 20 years ago, you can get a lot more than this. But unfortunately, I have no guarantee Amazon is continuing to grow at that rate also. And by the way, Apple also, nobody thinks that it's going to keep going up, right? Apple. What are they going to make? Another iPhone 13, 14, 15, 16. They are never going to make another new completely paradigm shift product. Just face it. It's either iPad or iPhone, iPad or iPhone, iPad, iPhone for the next 20 years. Yeah, so I wouldn't dare to buy Apple stocks, by the way. So put money here. I can sleep peacefully. So I'm very, very happy about this. Okay, it's called annuity. And some of you are very concerned, like, hey, I see that there's some non-guaranteed component there. You see? Above the red color is non-guaranteed. Hey, what if the non-guarantee is zero? Then how? Don't worry lah. Why are you so skeptical? Okay, the MAS, can you see MAS below? Source come from MAS, Monetary Authority of Singapore. They have been auditing all the top 10. Okay, they audit all the licensed insurance, but these are the top 10 listed in Sunday Times last year in October. And look at this. Every single company here, every single company is 4 to 7%. Did you see it? You anyhow close your eyes and choose any company like AXA, Etica, AIA, Aviva, Prudential. It is all 4 to 7%. So don't be so skeptical that it's zero. It won't be zero. It's not easy to get zero. No? Not easy. A person has to be like a total idiot to get zero. Okay. Yeah, so as long as you just do the normal things like get maybe 40% bonds, 30% stocks, then the rest of it is property, definitely it won't be zero. Okay, it'll be between 4 to 7%. Yeah, so I'm very happy with my annuity. Yeah, and you can see that I'm very proud. By the way, in case you are wondering which company we come from, Yuan Tai, me and Alvin, we come from Prudential. Okay, we're not here to promote Prudential, but I think we should at least review our identity. Yeah, so you can see Prudential is between 5.84 to 7.09%. Very good. Okay, I'm very, very happy. I can sleep well at night. And some of you might be wondering, like, you put in for 15 years, then what if the 5th year you need money? What if the 7th year you need money? I get this question a lot. First of all, just now Yuan Tai already said you should have some emergency fund. Okay, there are only 2 kinds of situations you will suddenly need money. Number 1, if you lose your job. And by the way, I told you I lost my job, right? So I have personally experienced losing my job. And what you need is emergency fund, not like cancel your insurance plan, cancel your annuity. You're supposed to have emergency fund, okay? So this will settle scenario 1. Scenario 2, if you cannot work, you must have like cancer or some kind of disability or something. Then I have good news for you. Because if you buy enough insurance, ka-ching, ka-ching, ka-ching. This is like striking lottery, Suddenly got, wow, $200,000 come to you, $500,000 come to you. Of course, you'll be quite sad that you got cancer, but at least got a lot of money come to you. Yeah, then using that liquidity, you don't have to cancel your annuity. Okay, do you see that by now? The logic of buying insurance plus having emergency fund will ensure you never ever cancel your life insurance or your annuity or your savings plan or even your stock investment. Okay, don't cancel all these just because you are retrenched or you got cancer. So liquidity is a double-edged sword. Now let's turn it around. If CPF allows you to take out money anytime, okay, can you tell me, by the time you reach 65, will you still have enough money in your CPF or not? Okay, please be honest. Go to the Zoom chat and tell me, based on your observation about people around you. Okay, if CPF allows you to take out money anytime you want, for wedding, for renovation, for holiday, Royal Caribbean, like, will you still have $279,000 left when you are 65? Okay, actually, you don't even need to answer me, although all of you say no, because CPF actually did that before. They allow people to take out any amount they want at 55, and everybody took out everything. And guess what? By the time they reach 60, just 5 years, 55 to 60, they are left with nothing. Okay, which is why you see a lot of people cleaning table. I'm not insulting people here. No, cleaning table is a dignified job. I'm just saying that if we have better financial competency, then we wouldn't be doing this, right? We wouldn't be taking out all our money at 55, spend on Vietnamese bride, and then spend on small chip stocks, and then spend on China stocks, spend on this and that, and then ending up with no money at 60. So CPF, very clever now. They say that you cannot take out everything, okay? You can only take out whatever is above 279,000. Okay, if it's 20,000, you can only take out 20,000. Okay, if it's 5,000, you can only take out 5,000. Then the rest of it, 279,000, remain there. Okay, because they know that you're going to live all the way until 85 at least, and therefore they don't want you to cause social issues. So liquidity is a double-edged sword. Okay, I know you want money anytime you want, but it's actually good to lock in your money into CPF and annuity. Okay, I seem to be like from PAP here. I'm not from PAP. I run my own company. I just want to be very clear about it. And by the way, I support Workers' Party. Yeah. This Saturday, I'm hosting a talk for someone very famous in Workers' Party. If you want to come later, private message Yuan Tai, Alvin, or me. Okay, we're hosting this talk for Dr. James Lim. Okay, now let me summarize. All the CPF add together is about 700 plus to 2,000 plus. And my annuity add together is about 1,000, how much? 861, okay? So when you add everything together, simple mathematics, I will get about 4,000 plus passive income per month. And if you do this very well, and plus what Yuan Tai say about dividends, about value investing, plus property, and then plus what Alvin is about to say later, then I tell you, you will be one of the top 20% who has planned very well for your retirement. Okay, so right now, I want to give you a chance, okay, to take action. Scan this QR code. All you need to do is give us two things only. Your current age. Okay, if you're 25, just put 25. If you're 45, put 45. And number two, just type in how much money you want per month if you retire. Okay, it's the same amount that you just key in just now. Okay, some of you put in 5,000. Some of you put in $2,500. Okay, so just scan this QR code now and put in your age and your amount that you want, and I will either Alvin, me, or Yuan Tai, we will magically conjure up a number that you need to start saving from this year onwards. I give you an example. If you say you want $2,500 per month, and right now you are in your early 30s, then potentially, roughly, you might need around $1,800 per month to put in, okay, for the next 20 years or so. Okay, so this is what we're going to do for you if you scan the QR code. The moment you are done with the survey, can you quickly type done, D-O-N-E, so that we know when to change slides. Okay, I'm going to give you roughly about 30 seconds to quickly type in on the abundance tools. Hisham, you're done. Wow, fastest finger. I treat you to Starbucks. You know, Starbucks, the counter always got the free milk there. Okay, you can pour any amount of milk you want from that free flask. Sorry, so cheapo, Eugene. Yeah. Okay, Joel is done. LH is done. Hey, quickly, so that you all know how much you should be saving per month. Hey, there's no obligation. Doesn't mean that you know how much you should be saving, then suddenly you're obligated to save that amount. No obligation at all. It is purely for knowledge, so that at least you have some financial discipline from today onwards. Okay, Aaron is done also. Queenie is done also. Vanessa is done. Okay, very good, very good. Congratulations. Right now, I want to invite our MC and our final speaker, Alvin, who's going to blow your mind away because he's going to share something that is the blind spot of many, many people. Please, a round of applause and put your hands together for Mr. Alvin Chin.
Okay, thank you very much, Eugene. A lot of energy from Eugene as well. Give him a round of applause. Hello. Well done, man, Eugene. Okay, let's continue with our 3I formula. I think I'm share first. Where are we? Let me see. Oh. Okay, basically just want to introduce a little bit of myself. I have 3 kids and a lovely wife. I have done a lot of my planning with regards to the 3I, and I'm going to share with you the 3rd I. Before I share with you, perhaps we do some question and answer, just get to know you a little bit more and your knowledge. What kind of situation will you cause you to terminate your first 2 pillars prematurely? That is the investment portion from Yuan Tai, type in the check, and the other one is the annuity, the passive income that Eugene shouted about. Type in the check. I would like to know what is your response. What kind of situation? Come on. I want some response. Accident. Yes. Accident will cause you to lose that credibility to get income. Who else? Cancer, touch wood. Oh my goodness. Loss of job, illness, retrenchment. You guys are spot on. I'm going to lead you to another question. Okay, somebody talk about cancer. How many percentage of Singaporeans will develop cancer in their lifetime? Can you make a guess? A, B, C, D. A, 0 to 5%. B, 10 to 15. C, type in the chat. C for Queenie, Joel, so C, Aaron, LH is B, and Hisham is D. Hisham, why are you so accurate? Oh my goodness, you probably know your stuff very well. This is actually true. It's D. It's quite high. The percentage is 20 to 25%. Let me go on with the next question. Out of all the deaths that occurs each year, how many percent are due to heart disease or a stroke? A, B, C, 10%, B, 20, and C. Type in the chat, please. Too much good food. That is C, definitely, yeah. Absolutely. Actually, it's in fact 1/3 is 33% of death occurred due to stroke or even the heart disease. If you look at all these questions, it leads you to this question. Let's talk about what happened to the persona that the Yuan Tais talk about. Mr. Tan's family. I mean, this is very, perhaps it is really real that Mr. Tan may get contracted cancer. What will happen to Mr. Tan's dreams? The dreams that he's talked about. Oh my goodness. He's unable to work, no income. Exactly, the disposable income is gone, and the first 2 pillars will be affected. The monthly investment as well as the monthly annuity. True. So this is the situation that a lot of us did not really take care of. What we address here is that many Singaporeans are neglecting this very important I. Type in the chat. I believe you guys will know what this I means. Anybody have a hazard on a guess? Insurance, Joel, absolutely right. Yes, insurance. Insurance is we will say that this is the pillars of the strongest pillar, the foundation for these three pillars. If there's no this pillar, the other two may just fall apart. When it comes to this building, we are talking about the three pillars that support this structure. Again, it is quite surprising. If you look at this article, when I chanced upon this article, it says here, Singaporeans lack 80% of critical illness protection needs. That is an information gathered from the Life Insurance Association. What this means is, if you are supposed to, say for example, the persona that we talk about, Mr. Tan, is probably has say $500,000. Let's take an example, $500,000 for critical illness protection. Is underinsured by nearly 80%. That means is most likely he's only insured at 100K based on this survey. Okay, that is very alarming. In fact, this is really a bright spot that we see most of the Singaporeans face. Let me ask you a question. Perhaps you guys may know this. Some of you are old enough may have bought some critical illness coverage. May I ask, how much critical illness coverage do we consider as sufficient in terms of the number of times of your annual income? Can you guys give a guess? How many times? 3.9 times, Aaron's. Wow, that is very exact. I think you got it from some knowledge. Who else have a guess? 3.9 is very chun. 100K and Joel. Wow. Number of 5 times is Yuan Tai, 10 times Hisham. Oh my, it's varied, but the recommendation from LIA is 5 times the annual income. The basis of this is basically they think that if you are contracted with critical illness, let's say for example, a lot of plans currently have early critical illness. They detect it early. And when they detect your critical illness early, you kind of recover in the first 2 years and perhaps the third year. And you have 2 more years to recover and recuperate and get back to the society and work your way up again and get a job and have an active income again. So the critical illness is critical for replacement of your income when you could not work. So that is where the blind spot is. I hope you guys got it. So this is the income portion. I'm referring to the insurance portion, the critical illness portion for a holistic protection on your retirement planning. Okay. Okay, let's get back to this persona. I would ask of you this question. What is the magical formula for this solution, which I have mentioned, critical illness? How does it work is that, let's do some calculation. You guys may have guessed 400, how do I get 480,000 coverage for Mr. Tan? Anybody have a guess? Perhaps type in the chat. 5 times the annual times 12. So 8 times 12 times 5, which is 48,000. Okay. Okay, one more question for you guys. Any clue how affordable is this critical illness? It's basically a term plan. A, $300 per month. B, $500 per month. C, $800, or D, $1,000 per month. Type in the chat. Maybe you guys have a clue. D, Joel said D, 1,000. Oh, that is a little bit steep, huh? I think you can afford it. Joel, who else? Who else have another guess? I just want to see. Okay, Joe. LH say D as well, and Vanessa is D. Vanessa is B. Yep. And Aaron's is B. Seriously speaking, it's so affordable at the age of 45. It's $500 per month. You can imagine if you are younger, it's much lower. So it is very affordable. I will urge everybody, when you are considering retirement planning, take care of this blind spot, critical illness protection, where you say, for example, to protect yourself and let the insurance company give you the assurance and give you the income when this unforeseen situation happen. Okay. All right. Thank you very much for your participation. We kind of summarize tonight. I think it's 5 minutes to 9:30. What we have done is that earlier on, Yuan Tai briefly and very succinctly mentioned about all the investment plans that is possible with regards to different instruments on investment. And I would summarize that the best part of the gem is the 3D, not the durian that he's talking about, the 3D duration, which is the compounding interest that